Good afternoon, Alex Cole, and welcome to the latest episode of GoNoGo Charts for StockCharts TV. How are you doing, my friend?
Very well. Snow again. Snow coming down outside again. Hoping I don't have to shovel too much, but excited for the show.
You know what I'm happy about is that it's mid-January and it actually looks like winter. I think when it doesn't, if it's too warm and there's no snow, then we've got bigger worries. Just like the markets, people have got a lot to worry about, a lot to be watching right now. We wrote to our subscribers on Monday about the markets being at a real decision point in many respects. So let's look at how things have played out so far this week, and if there's some more information that we can share with everybody about making a trading plan going forward. So let's start right off the bat, just looking at the sectors of the S&P 500 relative to the benchmark. So the GoNoGo Relmap showing the trends of each sector as a ratio to the S&P 500. What jumps off the chart to you, Alex?
Well, what we were talking about in Flight Path on Monday was that rotation that we've been seeing again since the start of the year back into the value sectors, those more cyclical sectors. And we saw that hold up this week. You're seeing materials, energy, financials, industrials, those sectors remaining in their go trends, and the market being pulled down a bit by the growth, mega cap growth, such as the discretionary and technology. So we are seeing what we were looking at on Monday, just really holding up this week.
Fantastic. You know, one of our favorite quotes and what went out to all of our subscribers on Monday comes from Charles Darwin, who said that it's not the strongest of the species that survives, nor even the most intelligent, but the one that's the most responsive to change. So Alex and I, we're not diehard value investors or growth investors, and I think being dogmatic about a style of investing is really dangerous. What we want to do as technicians and responsible investors is respond to what the market is telling us. And right now, we're seeing those cyclical and defensive sectors leading. So Alex, fantastic visual there, just looking at the trends, strip out the price action and just look at what's performing on a relative basis. Let's move right along. And speaking of the growth versus value trade, if we're just talking about the large caps in that space, Russell 1000, looking at the ratio of the IWF to the IWD, let's take a look at what's happened this week. And what we were talking about Monday morning is that we ended last week at a real decision point on the weekly closing basis. We're at a really tremendous support line, seeing if that was going to hold. And of course, GoNoGo trend indicating that neutrality. There isn't a directional trend to be understood at the end of last week. Here we have a little bit more of a breakdown on the weekly chart.
Yeah, we've got this real obvious polarity concept playing out on this chart, with the same levels acting as support multiple times and also resistance then when we saw this correction in the ratio in the middle of the chart. Like you said, when we were writing on Monday, we were noting that we were in a sort of directionless amber go fish bar. But this week, you can see, if I zoom in a little bit, that we are creeping into a no-go and threatening to break below that level again. So very important moment for that ratio of growth to value.
Absolutely. So let's dive in a little deeper. If we go down one time frame to the daily chart of this ratio, let's see kind of how that's been trading. My goodness.
Yeah, and you can see the breakdown on the daily. It's obviously been in place now for the last few weeks. We've got the no-goes, and then we've got the break of multiple squeezes. We've got the resistance, the retest of the zero line on the oscillator. And then as we fall and then into much lower prices, you see that the no-go is quite strong on the daily chart.
And so just for review for all of the watchers and listeners here that aren't familiar with GoNoGo charts, in that top panel, we're just looking at price trend and a blend of technical indicators that otherwise might create a whole lot of additional lines and clutter on your chart. So we're keeping price at the center of our focus, but using the color, all the advanced computation, all of the heavy maths, sort of behind the scenes, delivered in just those go-no-go colors. So the pink and purple being no-go trends or downward trends. And then in the lower panel, Alex, talk to us about what's happening with GoNoGo Oscillator.
Yeah, so GoNoGo Oscillator, likewise, an attempt to blend the most powerful or robust momentum indicators into something that was simple to read and gave the same picture, but in one indicator as well. So when you take those two together, you get a sense of the trend and the sense of momentum. So when we talk about momentum, we're really talking about market enthusiasm as well. So seeing whether or not there is excessive buying or selling adds a lot of weight to our opinion of what's happening in price. And in this case, we're seeing that momentum is underneath that objective zero line, which is really what you'd expect when a no-go trend is in place. And as that zero line gets tested, if the no-go is to continue, we'd expect for the zero line to act as resistance and turn away the oscillator back into negative territory. And when that happens, especially when you break out of this squeeze here, which we could talk about as well if you'd like, we get this continuation icon, this red circle, telling us that the no-go trend is in place, and we're seeing a resurgence of momentum in the direction of the trend.
Absolutely. Yeah, I think the data visualization is really key here. We're trying to understand that knife fight between buyers and sellers, where price is trying to find direction, and you can see that range just tightens. We're in the amber, what we like to call go fish bars, and then that orange grid in the lower panel is climbing as the oscillator rides the zero line. There's no defined buying or selling momentum, even though there could be heavy volume at these levels. But when it breaks to the downside, that's where we see the trend confirmation follow, and then price as well. So Alex, we're talking about the growth versus value trade. Let's look specifically at the U.S. equity information technology sector. I know everybody's got something to say about poor Cathie Wood. Many of the investors that came in right at the peak. Let's not worry about the ARK innovation ETFs right now. Let's just talk about information technology more generally. And on that weekly view, we're still seeing a really strong uptrend, correct?
Yeah, the weekly trend has certainly been holding for technology for several months, and we can see it right now testing that level again. So this is, like we said at the outset of this note on Monday, a critical juncture really across several areas of the markets that we look at, and this being one of them. Certainly in the shorter time frame, the talk has been about technology bringing the market down, and that we will see that on the daily chart. But on the larger time frame, we are seeing the trend is still in place, albeit on slightly weaker aqua bars, and a test of this traditionally drawn trend line. If we turn to the oscillator now, again, very, very important moment. Heavy volume being traded on the tech sector. You can see that because the oscillator line is a dark blue. But again, testing that objective zero line. And we can see throughout this trend, when the oscillator tests the zero line, until this point, we've found support. And that gives us these go trend continuation green circles that would have allowed some of our institutional clients to probably scale into positions or enter the trend that is in place. Maybe they'd go down a time frame to find a really good entry. But again, very, very important moment at the moment as the oscillator again tests the zero line, and we see it testing that hand-drawn trend line in the panel above.
Yeah, and you said that very well. For very long-term investors who are moving large pools of capital, they're looking at longer time frames. And so this weekly chart of the XLK, there's a lot of speculation here if this is just another buy the dip moment, a chance to scale into what could be further continued upside for technology in the U.S. equity sector. But let's look at that daily chart. Let's see what destruction has been happening on the shorter time frame. And for those of us who are even, Alex and I aren't here to prescribe a certain trading strategy. You might be looking for a snapback and a mean reversion at this stage, or you might be looking for the short-term trade to the downside, right? To catch a good short on technology names. Yeah. What are you seeing on the daily chart, Alex?
And I think with GoNoGo, with the idea being to get an overall sort of complete sense of the technical analysis that's happening, like you said, rather than prescribing a certain strategy in terms of long or short or having an opinion, you could use this chart in a couple of ways. If you are of the view that the market bias is still in an uptrend on the longer time frame, even if you wanted to be aggressive in terms of getting an entry into that longer time frame, we're seeing a short-term counter trend correction green arrow on the chart right now, meaning that in this current no-go, we might expect a short-term rally in price. Or you could be looking at the daily, waiting to see what happens the next time it rallies to hit the zero line. And if you get another trend continuation icon, you might be interested in playing that to the downside, as you'd expect then price to roll over. So with the hopefully with the visuals that we built into this, you can use it however your personal strategy takes shape.
Absolutely. Well, let's switch gears again. We're going to keep this moving for everybody who's on the line. You and I are big fans of John Murphy's work. Obviously, understanding intermarket relationships is critical to making your thesis expressed in the equity sectors. So we're going to look at bonds for a second. First, I want to pull up TNX, $TNX, just to look at the CBOE's 10-year yield on US government treasuries. And last week, it wasn't that we had a major change in the yields. That sort of ended the week flat, 1.75, 1.77. But we have seen a gap up on Monday, sort of consolidating that gain. But we're at 1.84% on the 10-year. The reason interest rates are important is that those growth stocks, the higher multiples that you see in a lot of the large cap information technology space, investors are less willing or have less appetite, right? There's less demand for those growth equities in a rising rate environment. And so the interest rate play here is important to note as we're thinking about that growth to value trade, and really just a lot more demand for cyclical and defensive sectors of the market as rates climb. What's driving these rates is the lack of demand in U.S. government treasuries. So let's pull up the TLT, Alex, just an ETF that captures 20-year U.S. government treasury bonds, and we can see further selling this week.
Yeah, I think we brought this up on a weekly chart in our flight path note on Monday.
Yep.
And we saw again this concept of polarity: support. Once broken, becomes resistance. Tested. Yep. Lots of resistance, and then eventually when it rolled over. And now we are seeing on the weekly, at the beginning of the week, we were talking about how, again, a very important inflection point. Yep. Amber go fish bar for last week's closing price. But this week so far, we are looking at an entry into a no-go trend with the oscillator moving further into negative territory.
Absolutely. So as bonds sell off, yields go up, rates are higher, meaning there could be less demand from investors for those higher multiple growth stocks. All right, so we've talked about the rising rate environment. We've talked about a lot of decision points for the market itself. Where do we go if these trends are at critical decision points and even breaking to the downside? I think it's really important to start thinking about diversified asset classes. Let's look at the U.S. commodity index just on a monthly basis. Let's get a long-term perspective on what we're seeing for commodities in this rising rate environment. And certainly everybody's been reading all the headlines about inflation being here to stay.
Yeah. Again, this is, if you've listened to our show, if you've read our research, or if you've read any number of people's research, there's been this talk of a, real boom in commodities, long-term trade idea. And we're seeing that on a monthly chart being played out here. At the beginning of the week, we were saying we're right up against this resistance level. And this current bar now is looking as if it will break above those prior highs.
Absolutely. That's an impressive rally off the 2020 lows as the economy comes back into full steam, Omicron notwithstanding. And apologies to anybody who is still sick and suffering through some pandemic woes. But let's dive into the commodities index just on a daily basis, and we can see this trend playing out on the shorter term as we're breaking above that trend line.
Yeah, exactly. So a real strong, uninterrupted period of bright blue go bars as we sort of burst through that resistance level. And you can see that the oscillator's really been in positive territory, flirting with overbought and staying there. And even now, volume has really started to pick up as well. So again, you and I know, as so many do, that overbought is not the problem in an uptrend. So we would at the very least be waiting for this to go back towards the zero line. But excessive buying is only a good thing, really, to reflect the strength of a trend.
Absolutely. And of course, the test of that resistance line, some overhead supply for commodities in October, and then busting through here to start the new year. Within the commodities index, and we're talking about everything from diversified baskets of softs, grains, obviously the energy trade catching most of the headlines as we see oil spiking up. Let's look at industrial materials, some of the mining companies that we might think about, like RioTinto, international conglomerate. They're pulling industrial metals, but also some precious metals. And we'll talk about that in just a second, about where the trends are for things like gold and silver. But if we look at a company like RioTinto, Alex, what's screaming to you on the GoNoGo chart right here?
Yeah, and like you said, they mine everything from iron to copper and gold and even diamonds, and so a very sort of a broad representation of materials and mining
and uranium.
Yeah,
they're involved in everything.
They're involved in a bit of everything, and this was, I think, a company we discussed in our first flight path of the year at the beginning of the new year, just because we saw this basing and this new go trend. We saw the support at the zero, the go trend continuation icon. And then we were looking very sort of, intently to see what happened at this level, as we'd noted that there was periods of support and resistance on the chart at these levels. And it really blew through that, gapped higher, consolidated, and has gapped higher again. So when we're talking about that move to cyclical sectors, this is a really, on a single stock sort of basis, this is an idea that that is really playing out.
I think when I see charts like this, thinking about trend following as a strategy, how encouraging that you can take a position in things that are striking new goes. They're not always going to work out, but you have really well-defined risk levels. And when they do work out, if you can stay with those trends, the whole point of GoNoGo charts being that we have to be patient as investors to catch the full length of a trending move. And so really nice to see that continuation for RioTinto. We referenced precious metals versus industrial metals or energy or other commodities. Let's check in on gold. There's been some chatter this week. I know a lot of investors are perhaps they've been overweight gold for way too long. It's been done no favors for anybody over the last year and a half or so. But if we take a look at let's start with the daily of IAU. Gold ETF, just to see how the precious metal has been performing on that short-term trading basis at the start of the year.
Yep. So, like you said, really, it's been nobody's friend. It's been a real struggle to really get a sense of where gold is fitting into the picture over the last 2 years, really. But given the rotation we're seeing, given everything else we talk about, perhaps it's time to look again. And in the short term, since the beginning of the year, we've seen a new go. And we've seen, importantly, support at the zero line on the oscillator, giving us that go trend continuation. So we'd be looking now at this to see if it can get back to test these prior highs and potentially move higher, especially with all the other narrative about a rising interest rate environment and the booming commodities markets.
And there are times in history where gold has been a great hedge against inflation. We're seeing that all of the accommodative monetary policy from the US government, and including fiscal spending, is starting to devalue the currency. People have been looking at the US dollar rolling over. But until gold shows us that it's going to really begin to outperform, this is just a bounce in a well-defined long-term downtrend over the last year. But Alex, let's look at the good news on a monthly chart. For Peter Schiff, it's good news. For those gold bugs out there that have dedicated their entire lives to looking at and investing in gold, back that up. Let's look at even like a 10, 20-year view on a monthly basis, so we can really see what you and I have been a fan of for many years. The William O'Neill process and early Edwards and McGee discussions of pattern analysis.
I mean, I think
couldn't look more like a cup and handle to me.
Well, it looks like it's trying, doesn't it?
Yeah.
This is a fantastic, dare you say, mid-move consolidation. Couldn't be more cuppy. You've got this massive long-term move into it. You've got this really beautiful, smooth cup. And then, of course, the Go trend on the monthly resumed on the right side of the cup. And we are getting these re-entry, long-term re-entry points over the last year. However, if the reason I zoomed in at the beginning was that we are again, everything seems to be sort of critical at the moment, but we are riding the zero line. If you don't mind, I'll zoom in again just to bring that up in the monthly chart, but only looking back a couple of years. You see that we've rallied. We got a short-term counter trend correction, red arrow, and then we've consolidated those gains, and that's caused the oscillator to fall to the zero line and ride the zero line. And when that happens, for every bar that the oscillator stays at zero, we get the climbing grid of the go-no-go squeeze rising to its max. And that just tells us that there's been a real reduced volatility situation on this monthly chart. And you like to talk about that knife fight between the bulls and the bears. And that's completely appropriate, because you've got a struggle to get a clearly defined sense of positive or negative momentum. Could be lots of volume, as you saw here, but no real direction of momentum, either positive or negative. So we'll be really interested to see which way the squeeze is broken. Is it broken to the upside, which we'd expect, given that we're in a go trend? Or if not, then will it break down into negative territory?
And that's really the main question anybody should ask is, what is your time frame, and what is your risk objective? And so when we talk about gold hasn't been anybody's friend, you can just see that period of underperformance since about June of 2020. You could have held anything but gold and found some outperformance. But if we see a retest and a breakthrough of those highs from June of 2020, we could be off to the races in precious metals. That applies to gold, silver, and all the rest.
Right.
Alex, as we wrap up this show in the last few minutes for today, I just wanted to encourage all of our listeners to think about perhaps, I'm going to use a dirty F word here for a second, the fundamentals of what we're looking at in this marketplace. Meb Faber has written extensively on the Cape-Shiller valuations, and on all of us as investors having a really strong home bias. So if we're trying to be diversified around the world, American investors are certainly holding much more of the US stock market than anything else in the world. And when we look at our currency starting to roll over, we're seeing this inflationary environment. Where might we turn to find outperformance as things chop around in the U.S. markets? And I think what was interesting to write about this Monday morning in our research note was just looking abroad, ex-U.S. What are the economies that are mostly tied to the commodity space that are starting to show some outperformance? So, Alex, if you wouldn't mind, just bring up an ETF of Brazil. EWZ is one that we referenced. And what a time for all of us as investors. We can get exposure to almost anything in the world quite easily at very low cost. You don't have to call up your broker in the 1970s and kill somebody to get access to a foreign stock market. Right here on StockCharts.com, we are looking at a Brazilian ETF, and look at that breakout on the right-hand side.
I hope you didn't think I was rude, but I covered my ears when you said fundamental. Just
no problem.
Being the technician that I am. But talking about moving outside of the U.S., but then combining that with the other market themes that you're seeing, like the commodity strength, you end up with something like the Brazil ETF, which of course their economy is very strongly driven by commodities, and that we pulled that into our flight path note this week because we'd seen this amber series of bars here telling us that the NoGo that has primarily been in place for quite some time was being threatened again. And when we saw the cross above zero on the oscillator on heavy volume this time, and now we've seen the go be established. And for the first time, even we had these attempts earlier, for the first time we are seeing the strong blue bars of the go-no-go trend as we've sort of really raced away those sort of 3 days this week. So really interesting to see how you can incorporate. And even at the CMT Association, what do we talk about? We talk about navigating the gap, right? So
Yeah. And so the gap between intrinsic value and market price, right? As technicians, we want to understand what investor behavior is driving in terms of supply and demand. The fundamental side, if they're looking at a cyclically adjusted PE ratio, they're saying US equities at 40 on a Cape Shiller are really expensive. We got to 45 in 99 before the tech bubble really burst. And so if we're thinking about global asset allocation, we can look abroad to find things that are in lower valued, Cape Shiller ratios, things like Brazil that are going to benefit from this long-term uptrend in commodities. And let's look at one more example, Alex. If you could pull up Hong Kong, EWH.
So
a little more diversified than Brazil in terms of its dependence on commodities. Great trading center for the Asia Pacific region, and also catching the bid, breaking out of what could be looked at as a pretty long-term base.
Yeah, similar looking chart, really gapped higher, strong blue bars. We're at a very important point right here where we might catch some resistance from these prior highs during the downtrend, but again, very strong looking on a daily basis.
Fantastic. As always, Alex, I really appreciate all of your insights. These incredible tools, GoNoGo Charts, they're now available on StockCharts as an ACP plugin. So for those of you who've been watching and want to give this a whirl for yourself, you can try the GoNoGo Starter Pack. It's free. You'll just look at the GoNoGo trend, simplify your process, avoid analysis paralysis. Or for those of you who want to look at the complete technical picture, you can pick up the GoNoGo Charts ACP plugin, now available on StockCharts. And thanks so much for watching, whether you're on YouTube or StockChartsTV.com and the on-demand app. We really appreciate your time. Stay safe, be well, and we'll see you next week. Thanks, Alex.
You're welcome.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.